Hey guys, what's going on? Welcome back to the channel. Welcome back to another video. Today I want to talk a little bit about recession, my recession strategy, as far as my portfolio. Before I begin though, I want to tell you guys, man, you guys have been doing a heck of a job with these comments and giving some information that about different videos that I've done. Stuff that I haven't even known, and I got to commend you guys on that. I appreciate the subscription count going up, and I just appreciate you guys showing support for the channel, and it really means a lot to me and motivating me to do more content like this. I mean, which I enjoy doing it, and I enjoy talking to you guys, but I just wanted to state that before I jumped into this video. But yeah, let's get back into it. Again, thank you. Yeah, my portfolio strategy, I've been investing since 2014, right? And I've done well when I've done nothing. And it sounds weird, like the best time I've done in the market is when I learned to slow down and just take it for what it is and realize that it's not out of my control and it has nothing to do with the, basic functions of the company day to day. Now, what do I mean by that? If a stock price goes down a lot of times, right? And over an earnings report, it might not be that bad sometimes. And like if you're doing long-term investing like me, that's my strategy. I invest long-term. Now, yeah, I do try to find value, but I try to find value in companies that are been around for years and will be around after I'm gone. Something that my children's children, will benefit from, business-wise. These long-standing blue-chip type companies. That's what I usually invest in. Now, as far as what I don't invest in, and like this is general, like a lot of people that invested, they share the same similarities because you learn as you go from people that came before you and were successful. What I don't invest in during a recession, we're dealing with during a recession with this portfolio today, right? Now this is just my opinion and what I deal with, so please don't bite my head off. All right, I'm just a guy on YouTube that's sharing his experiences and what I like, and I like talking to folks, so hear me out. I don't deal with companies during a recession that are highly leveraged. That's number one. A company that's highly leveraged, when I say highly leveraged, I'm talking about somebody that's struggling with debt. Something that's a bankruptcy risk. Like you've seen everybody shooting on AMC, and they had all these meme stocks. I made a couple of videos about them. I stay away from that type of stuff. I'm not young enough no more where I can take chances and gamble with my money, or I could take a loss like that. I'm trying to get into my retirement phase and start enjoying some of the money I have accumulated when I started being smart, when I started investing. But I invested late. A highly leveraged company. The reason why I brought up the meme stocks, perfect example, Bed Bath & Beyond, right? And I'm not trying to beat a dead horse, but that's a perfect example of like a leveraged company. They got debt, they're struggling, wrong time, wrong situation, wrong time. We're in a recession, interest rates are higher. They're having a hard time, Then the situation with the CEO, which is unfortunate, I won't get into, but this is a perfect example. A year ago, you could have said, oh man, Bed Bath & Beyond got a lot of promise, man. It's going to come back, because every year companies are saying what they're trying to do to improve the company. And it's their job to do that. And they are trying to do that. But I mean, all management teams and everybody are not the same. Everybody's not going to see the same. And these type of companies you want to avoid when there's confusion in boardrooms. And this is a perfect example. It's unfortunate it happened. And I'm not straying away from what I'm saying. It's unfortunate that this happened, especially with everything that's happened in the past week. But this is a good thing for younger investors to pay attention to, because this can happen at any time to anybody if they hire the wrong people or they get laxed. So highly leveraged companies that are bankruptcy risk, dealing with debt, they have a hard time paying because interest rates are now, they can't, to get the loans, it would put them further in debt. It would mess them up. So that's number one, highly leveraged companies. Number two are cyclical companies. The cyclical companies I avoid, cyclical companies do good, when the economy is booming, and consumers, spending is up. People are just balling out of control with their money. Cyclical companies do good. Cyclical companies I'm talking about, high-end car manufacturers, people that make clothing, high-end clothing like Gucci and all this other stuff, if people are into that. High-end furniture. High-end furniture does good when the economy is booming and stuff like that. These are cyclical. They go in cycles. Depending on what the consumer sentiment is, spending and all that, if the spending's good, these companies do good. The spending goes down, you have problems. These companies, stocks usually go down as well. Of course, as we go into a recession, people are not spending as much. When they're not spending as much, they're not buying these type of high-end items. So that's the second thing. So first we got highly leveraged companies, and then we got cyclical companies, right? The third one, speculative companies, right? When you deal with speculative companies, these are companies like, some of the EV companies, where like we speculate down the line, and then people make their evaluation and they say, oh, I'm gonna jump on it now. Now, the thing about speculative stocks that a lot of people get caught up with, a lot of people jump on a hype train from somebody else that knows how to invest, and they know what they're doing. And they'll say, hey, I'm buying up as much Lucid as I can, or Rivian as I can, or just other companies. Like a lot of things with like speculative companies, a lot of times they don't make profits. So it's like, people are jumping on this because they're hearing other people jumping on, and then like people are jumping out and not saying nothing and getting caught up. So these speculative stocks are dangerous, only for the fact that only people that a stock that's speculative, if you're not going to buy it and hold it and see it through, you can't jump into it and then 6 months later jump out of it. A lot of times in a recession, these kind of businesses take a dive. If you look at, besides Tesla, you look at a lot of the EV companies, they're down. They're down. I mean, I was watching today on CNBC that a lot of the cell phone companies are down. So I'm not putting them in the speculative, but like any company can be down. Like in where we at right now, it's a perfect opportunity to be investing, because it's going to get worse before it gets better, because the Fed is hawkish and they're going to keep these interest rates going up and try to bring the spending down. So with spending coming down, like I said in other videos, you're going to have more quarterly earnings, negative quarterly earnings, and these companies are going to continue to fall. And that's where you jump in and pounce and get your opportunity. So when the bull market does come, you are running with the bulls. Now, what do I do invest in? Okay. The companies I'm investing in, my strategy, the companies I'm investing in are blue chip companies, that are already in my portfolio. Because a lot of people should stress this to you. If you have a portfolio with some very good stocks in it, a lot of them good stocks, like them blue chip stocks and stuff, they're high. They were high when they were, and they're coming down. Some of them are still high. Just be patient. Let time work for you. These blue chip companies, like me, I put my money in a lot of Johnson & Johnson. What else? I'm buying Tesla right now. I just started being on the Tesla train. I messed up with that years ago. I'm getting Tesla. Heavy in banks. I love financial institutions as investments. I'm heavy in the banks. Blue chips. I'm buying Tesla. The VOO ETF, the S&P 500 ETF. I'm heavy in it. Because I'm trying to make as little amount of risk as I can, to where when I get older and I already have the snowball effect on a lot of my stocks, especially AT&T and others like that. I have a level of comfort now, and I invested late, and I'm still nowhere where I need to be. But after investing and watching, CNBC and really getting into the stock market over the years, I can breathe easy when it's panic because I understand this is normal. And, you know, a lot of people should be like that, or you'll get like that. You know, you'll get to that point if you're a new investor. Other stocks I deal with. Like I said, these blue chip stocks. And there's one thing I'm going to say about these blue chip stocks. Good management teams. Good cash flow. Well managed. You know, like low debt. That's another thing. Companies with low debt do very good during recessions. You know, I deal with a lot with stocks that are counter-cyclical. And a lot of people don't know what counter-cyclical means. Counter-cyclical means during a recession, a counter-cyclical stock increases in value. So the recession, you know, we're in a recession, interest rates are going high, so are the stocks, banks. Right? Now, also when we're in expansion, right, they usually decrease in value. So as the economy starts to get better, these decrease. So like basically I use these type of stock, counter-cyclical stocks, you know, as a counterbalance. So basically when the economy is up or down, you get gains both ways. And you try to balance your portfolio. And that's one of the things you strive for. And there's so many stocks out there, you know, everybody's strategy is different. That's why I say it takes strategy to be successful when you invest in. Because a lot of people get lucky and they say that's strategy, but I mean, different economic times, geopolitical situations, war, anything can knock your portfolio off balance. But it's good to have a menagerie of stocks that can even out, you know, which direction you go in, and it's less of a drop when you're on the roller coaster. You won't feel it in your chest as much. Recession resistant stocks. I'll give you some examples of them. Utilities, consumer staples, discount realtors, something like Dollar General. Consumer staples will go discount stores, Dollar General, grocery stores, Kroger, and the like. Cosmetics, you know, things that people are still going to deal with. Firearms, ammo manufacturers, alcohol. People always want to drink. That's another stock, you know, a sin stock. You know, that's just basically it, guys. But you know, the type of stuff I don't deal with, and then I deal with when it comes to investing during a tough time like this. You know, everybody's talking about the wealth transfer, and this is the biggest wealth transfer. We don't know that yet. I mean, but we do know after the market falls for months at a time and it drops, once it takes off, it spikes, and you want to be a part of that. So like I said, and everybody else is telling you, if you're watching this video and you don't have no stocks or you're not in investing, this is one of those times where a lot of people say, oh, I'm going to wait till the stocks go down. I'm going to wait till this is that time. So do your homework. If this is something you want to get into it. You know, just, you know, do a little bit of research. It'll be worth your while. Because remember, all of us, especially as men, as we age, is something we all are running to, whether we want to admit it or not. And that's retirement. So I'd rather retire with something than retire with nothing. You know, it's bad enough we'll get to one day when we're on our deathbeds where we have to rely on somebody else to take care of us. You know, when we can take care of ourselves and those we're responsible for now and have something for them after we're gone. But yeah, guys, I just wanted to chime in a little bit and talk about that. Leave me some comments, man. You know, hit this like and subscribe button as usual. I like to hear. Tell me about what your recession plan are. Like, how you dealing with this recession? And hey, do you even think we're in a recession? We'll go with that. You know, but man, I love hearing from you guys, man. It's been a pleasure talking to you today, as usual. Thank you so much for spending time with me. Remember, keep dropping them comments. I answer all my comments, positive and negative. And I'll see you in the next video. Take care. Also, have a good weekend.